All right. Thank you for joining us for the GiffenCast podcast. I'm one of your hosts, Connor Jones. I am a business major with a focus in financing. I am here with my other host, Noah, who is a marketing major.
Howdy, howdy.
And I'm also here with Gavin. He is a primary financing major.
What's going on, everybody?
All right, yeah, and we're going to get into. So we've got a couple of articles to read. I've got the cost of living crisis prompts nearly 1 in 3 to consider moving. Mortgage rates inch up, but experts predict declines through 2024. As China market stumbles, Japan rises towards records. Switzerland's Holcim plans to spin off U.S. cement business, and U.S. aims to announce big grants for chip plants by the end of March. We're going to get started with the cost of living crisis. This comes to us from the Financial Reporter. It was written by Rozzy Jones. Cost of living crisis prompts nearly 1 in 3 to consider moving. Nearly 1 in 3 people, 28%, have considered moving to a new area to reduce housing costs as a result of cost of living crisis, according to the latest Pepper Money Specialist lending study. The study also found that the ongoing squeeze on finances has led up to 19% of people considering downsizing. The biggest impact on household finances has been rising cost of food bills, gone up 92%, followed by energy bills, which has gone up 86%, and travel costs, gone up 38%. Paul Adams, sales director at Pepper Money, said, faced with such a significant ongoing squeeze on their finances, millions of households are looking for ways they can cut their costs. Our study found that the desire to do so is so significant for such a large portion of people that 28% of all respondents said that they have considered moving out of their area to somewhere cheaper, whilst 19% thought about downsizing to reduce their housing costs. Whether customers are looking to move, downsize, or reduce their borrowing costs, brokers have a huge opportunity to help their customers to best manage the current economic environment and continue working towards the goals they want to achieve in their lives. I did hear earlier that it's not just food and electrical bills and stuff. It's also increased taxes in certain areas. For example, California. California raised taxes, people left, and California is now thinking about increasing taxes again. So there's stuff like that going on. Even though there are some reports that inflation's gone down a little bit, I'd have to look up how much it's gone down, but things are still drastically higher than they should be. Let's see. Yeah, nothing off the first page of Bing or Google is telling me exactly how much it decreased by in the past week. I don't know, and I know we talked about last week how there are some I know you said, Noah, you said last week that, wages are, sticky, how they'll increase, and they'll stay still, then increase. I don't know, I just don't see, a giant boost in wages coming in anytime soon to compete with the amount of inflation that we're seeing here.
If I had to wager a guess, the way wages tend to increase is businesses. So there's two ways you can increase wages. You can either do it as a government or as a worker, and it's hard to do it as a business. So workers increase their own wages by exercising their at-will employment, moving around jobs, job hopping, which I recognize for a lot of lower employment level jobs that aren't $60, $70, $80,000 a year is a really hard thing to do, because jumping from Wendy's to McDonald's to Burger King just isn't going to be that much of a change. Or necessarily one construction company to another is also probably not that big of a change. However, for the people in the more economically elevated position, That's how workers influence their wages, by forcing businesses to, if you want to keep me, you need to pay me to keep me, right? If you want my skill set, if you don't want to lose all the knowledge that I have, you either need to pay me more, or I'm going to go somewhere else where they are paying me what I feel like I'm worth. Which is what we've seen a lot in the most recent years. Another way to do this is like you can play this really funky trick with inflation, to where, say for example, you have a business, and if inflation goes too high, people can't afford, or that business will basically go bankrupt, right?
Yeah.
And it's not just one business; it's all the businesses everywhere could go bankrupt. So in order to kind of like, this is what the Fed does, where it's like, in order to kind of keep the economy not going crazy, you can offset businesses' losses by increasing inflation. When you increase the inflation, you reduce the cost that businesses incur paying out to people and doing a bunch of other stuff, right? It costs them less to pay this person the same. Obviously, everything else goes up. And now as a business, you're making just a little bit more money. You're not in as like rough of a position. Oh, no, I'm stupid. This is the exact opposite direction. This is how you lower wages sneakily. I know it had something to do with wages. Yeah, inflation is how you secretly lower wages. I don't know why I thought you could raise wages with inflation. But, like, I'll pivot this a little bit. What a lot of people seem to think is that deflation is the solution, right? So if the money becomes worth more, right, then their paycheck will increase. Prices of things might go down, right, to more accurately adjust. So a piece of bread costs $10, and after 8% inflation, it costs $10.8. Or, you know, we'll say it even like goes up by 50%. It costs $15, but then you suffer from deflation, right?
Mm-hmm.
Your paycheck of $20, theoretically, if deflation happens, businesses will lower their prices from $15 to $10 again, right? Because it deflated 50%. And now your paycheck that hasn't changed is now worth more again, right?
Yeah.
Except what ends up happening is the cost to make that bread, the raw materials, also goes up. So businesses can no longer afford to exist, and then they basically vanish. So your salary is worth zero now because you have zero money. But yeah, wages are just rough. They'll always trail behind inflation, always. And you don't even from like, so a good example of this, right? Wages actually saw pretty historic growth from about 2013 to 2018, that 5-year, 6-year stint. We saw some of like the highest growth in American history. Maybe not American history, but in a long time, right?
Yeah.
And we saw that growth immediately after the 2008 recession. 2008 to like 2010, there was a little bit of like a meh from like 2010 to like 2012, and then we saw the economy start to like ramp back up. It's like wages started to do better, people were spending more money, people felt more secure, and then COVID hits, everything comes to a screeching halt, and I expect to see, we're probably going to see something pretty similar to where, say COVID ended officially, the economic downturn ended in 2023, right? It's over. We're probably going to see that like 2 to 3 year like malaise period of like people not quite sure if it's over. Maybe there's another recession on the horizon. Maybe we're setting up for something. Maybe the next big dip is inbound. So you get a lot of like confusion or like malaise on the state of the economy, and then like 2025, 2026 rolls around, or maybe 2027, and you start to see stuff really pick back up again as we're past the worst of it. We weathered the storm, and we're moving. You still see consequences from 2008. See the price of housing.
Yeah. We'll see that in a second.
But like, given the way the economy was from like 2013 to 2018, like that was a good economy. There was a lot of like, in some respects, it was too good of an economy. It was way too hot, and it couldn't last like that forever. But this is economies are cyclical; they go up and down. Gavin, anything?
The one thing I was thinking about was this idea referred to as like money illusion, which is like when people perceive their wages increasing as direct correlation and increased purchasing power. This has to do with inflation and inflation percentage. So like hypothetically, inflation goes up 5% annually.
Mm-hmm.
So whatever percent annually will hold that as the variable X. And the other variable is your wage increase yearly. So say inflation goes up 5% annually, your wages increase 4% annually. Although you might be getting more money on the paycheck, it does not necessarily result in greater purchasing power because inflation exceeded, or the rate of inflation increase exceeded your wages increase. So when these people, I mean, I guess we can kind of tie in the idea too of sticky wages, not necessarily going up a crazy amount. If your wages aren't increasing, general idea, your wages aren't increasing, but inflation is, purchasing power goes down, and all these people are kind of growing concerned. That's why you're seeing all these people and I think third quarter 2023, fourth quarter 2023, everyone was like, not necessarily banking on recession, but they were thinking, recession on the horizon, recession on the horizon. Interest rates, inflation, all that's, very up and down, up and down. These people that are not necessarily seeing the wage increase are very concerned about how far their dollar is going, which is, I can correlate this back to the article, them being concerned more so of the cost of living because of these wages being rather sticky and them not necessarily having, let's say, as much money as what they might think because of their wages might be increasing, but inflation is increasing more, bottom line.
So I want to ask you a question on that. Does that work in the opposite direction? For example, if you have 5% increase in inflation every year and you get like a cost of living adjustment, a COLA, which I think is what you're talking about, you get a COLA for 8%. Do people feel like... So, okay, we'll use the end of COVID, for example, right? The end of COVID, you're looking at 8% inflation, right? Whoa, big inflation numbers, right? 6%, 7%, 8%, right? And then you get a COLA that's like 12%. But because you feel like you said earlier, right? Oh, 4%, I'm making more money. This is good, but it's actually not good. You're making less than you should. Your COLA was too low. Can the opposite be true of like people like, oh, I'm not doing great right now. The economy is really bad, even though you got a 12% COLA on 8.5% inflation, right? Or like you got like a 12% COLA on like 10% increase in prices, right? Which isn't necessarily true. Prices have gone up more than 10%, all that other caveat. But like, could it be possible that like people perceive their COLA as not as good as it should be, even if realistically it's actually way better than it should, because the business is not just compensating for like inflation, right? The 5% inflation that you anticipate, or the 8% inflation that's happening. They're compensating for like a 13% or like a certain commodities inflating more quickly than others. And so you're doing good, better than you should, in air quotes, right? Better than the strict economy would dictate. But you feel like you have less money. Is that possible? Is that like a...
I think that like would vary from person to person, so my opinion could be different than yours. So basically, it depends on different, I guess, item specific. So if one market, one basket of goods is experiencing a ton of inflation, let's say one basket of goods has 8% inflation, and your yearly wages increase 6%. So still not meeting the rate of inflation, but not necessarily crazy like below that. But basket B only went up 4%, but your wages are up 6%, but the average is like 5% total overall inflation. Your wages increased more, but depending on what products, what items you might be looking to buy, that will depend on how you view your wages in relation to inflation. So say I'm trying to get items that inflated a lower amount than say what my wages increased, I would be like, oh, like common sense, heck yeah, my purchasing power is more for these items. But for item B or item A, the one that had the higher inflation, you can look at those items and be like, well, crap, I can't buy these like I used to. My dollar doesn't stretch as far for items like that. If that makes any sense, or if that really answered your question.
No, I like that answer. It's a good answer. Which it kind of makes me think of something that we talked about a couple of weeks ago, which was like um, nominal spending versus real spending. So nominal spending
Yes.
being $200 got spent, but it was $200 got spent on 4 pairs of shoes versus $200 got spent on 2 pairs of shoes. The real spending went down, or the dollar per item went, even though the over like 2 years ago, like 2 pairs of shoes cost $60, and then now 2 pairs of shoes cost, or 1 pair of shoes costs $80. So your real spending went up, but your nominal spending went down because you're getting less for your money. Is that like related?
I would say 100%. And then like to build off that, I think CPI would be directly, correlated with what we're talking about in the sense that that really could track, like the purchasing power, and then the nominal versus real spending that you just referred to.
Okay. So I got two things to bring up. First thing, you all might know better than this. So, is there a way? Is it possible? You all could think of better consequences than I could. So, could we possibly do, like, let's say, inflation goes up 8% this year. Let's just say, bad year, 8%. Next year, required across the board for companies, not the year it's happening, but the following year, wages have to go up 8%. Even though, like, let's say for that current year, wages have gone down to 6%. But then the following year, wages have to go down by that 2% to make up for it. Does that make sense? Is there a way that we could...
So when you say go down by, just to be clear with the audience, inflation never goes backwards, ever. Inflation keeps going up. It's the rate of inflation that changes. So when it goes down by 2%, it goes from 8% to 6%, not from 8% to negative 2%.
Yeah.
Inflation always goes up. It never stops going up. And if it does, that's probably one of the worst things that can happen to your economy.
So is there, like, could we possibly pass some kind of law that might require that? Or, I mean, not like right now, but maybe we could okay, we'll test it in this state. What are some consequences? Because I can't think of any right now. Because
some sort of like enforced. Hey, so I think that could work. The only caveat I would give is like a lot of the more recent ones, and Gavin touched on this really well. A lot of more recent inflation doesn't come necessarily from the Fed, right? 8% inflation, obviously, is really high. But like we've seen products inflate more than 8%, like 20%, 30%, right? So would we want to base it off of the federal 8.5% at its peak? You average it across the year. There's an 2023. There's an average of like 7.5%, right? So every company must at minimum do 7.5%. Do we want to enforce that, or do we want to enforce something like, hey, even though inflation from the Fed was this much, based on this like calculation of, cost of living in the area, things actually went up 30%, or things actually went down for you. We wouldn't want to do reductions, by the way. I'm not advocating for people to lose money in their job because the cost of living went down at all. Be like, hey, you're getting a smaller COLA, or, you know what? I think I solved the problem just by talking, because I'm like that. I would say, I think it'd be worth testing out a regulation that's like, look, if the Fed puts out 8.5% inflation, or an average of 7.5% inflation over the entire year, you need to at minimum match that. You cannot do a cost of living increase that does not at minimum reach 8.5% or 7.5% of their current salary. That needs to be the minimum. That's what the entire economy inflated.
Okay, then. That sounds pretty good.
You need to do a cost of living analysis for like for the area that your like employee is in, which is not unreasonable. Companies do that all the time. Cost of living and like your COLA is literally based on where you live. Companies already do this. It's like, you need to do this. And I guess if you really want to be extra careful, because people like to complain about, like, there's a company that puts out like their shopping basket that shows like how you should spend your money and what should go where. And people always complain about what's in the basket because they're like, this is insane. How are you only paying $600 a month for rent? How are you only paying, $100 a month on gas? Like, what is happening here, right? You live somewhere where you pay that little in gas and that little in rent. You either pay that little in rent and a ton on gas, or very little in gas and a ton in rent. So do some sort of like, have some sort of regulatory agency perhaps that comes in as like, look, this is what needs to be done, or you change it to, I want to say like maybe like a write-off system, to where if you drive a car, the company has to pay for your fuel, and you basically report you give them your apartment cost in the area you're in versus the other apartments in like your specific area. So you're not comparing, for example, in Cincinnati, you're not comparing the nicest part of Cincinnati to the worst part of Cincinnati. Be like, look how expensive it is. You're comparing it to your neighborhood, right? What's the cost of living in your neighborhood? Did your specific situation change a ton? And I mean, at that point, you're kind of doing like location, which they already do locational analysis. I don't know why I'm caveating this. This is stuff they already do.
No, I actually completely agree with what you're saying. I think that exactly what you're talking about right now is something that should be considered or implemented.
Yeah.
Like situational based, cost of living.
Which this just I don't even think this is much harder for a business, because the easy solution is you pawn this off on the employee. You go, look, you want an accurate COLA? You offer the employee options. You go, we can either conduct a Cincinnati COLA, where we take the average in Cincinnati of gas usage, of whatever, and that's what you get. Or you do all of this like homework, you do all this reporting to us, with maybe some level of like justification, and it goes to, I want to say necessarily a third party board, but like some sort of like external. You work with like someone at the company. And you're like, look, these are my personal finances. This is this. Like, these are my personal finances. I buy these groceries. I do this, and like I buy, I shop at Aldi. I fill my gas up. I drive a V6, so I need XYZ fuel. I live in this part of town. This is what the other houses in my area look like. And you work with us to help us develop a more consistent and like useful COLA to you, but it might end up you're squeezing out 2%. You might squeeze out like an additional like 5%, maybe 7%. Or if you're in an area where you're trying to save money, or you're just not in like the nicest part of town, maybe you take that average Cincinnati number that like the system runs automatically, because it is a little bit better than you should reasonably be getting, right?
Mm-hmm.
Having some sort of like, and again, the companies, it's like you either this would put companies in a little bit of a weird position, but I don't really care. Where it's like now HR's got this really funky issue of like, or HR and finance have this really funky issue of like, how much can you trust that like what this person is giving you is actually, I don't even know why I'm saying this. This is a super easy fix. Just go, hey, if we find, we're going to do like a light audit. If we find that you're being dishonest on any of these, and within reason, right? Say you are, give it like a 3% margin, like positively. Hey, if you're in like this neighborhood and you're pulling a couple of houses that are like way more expensive than everything else in this neighborhood, you just get the standard stuff, and you can try again next year, but this year you just get standard, right? Because you tried to like cheat us, right? Or whatever other disciplinary issue you might want to engage with, that fraud or what have you, right? But like just institute some sort of like semi-relevant disciplinary action that does require the company to put in work to institute. So there's not an incentive for the company to go swinging it around like a hammer, but there's also an incentive for the employee to not be like super dishonest with like what their cost of living is. Because I don't want to hear someone who lives in like the way outskirts of like middle Indiana where there's nothing say, my cost of living is $350,000 per year.
Yeah.
And like they picked like this extremely expensive neighborhood that they live like on the other side of. They're not in the neighborhood, but they're really close. Like you want to have checks and balances where it's like, don't let the company swing it like a hammer. Let the employee improve their life. And this is one of those. This is the ultimate problem with people. Is like you can only counter dishonesty so much, and you can only counter like power hungriness so much. We just have to put our faith in people and go look on our system by and large. Be honest with us. Like, don't be spending like $1,000. I say $1,000 like it's unreasonable. Don't be spending like $2,000, $3,000 a month on groceries because you're buying like Tibetan truffles that cost like $600 a pop. Don't do that. Okay, that's on you. We're just not going to include that in the audit. We're just going to say, yeah, well, you bought Tibetan truffles and we're not compensating you for that. That's not a normal grocery. And like, oh, my clothing bill, this, or like, is clothing included in groceries? I don't know.
I've never seen
It would
it
just be
included.
general, like, is there a specific like apparel portion or
Yeah,
like?
I don't know. Actually, how is clothing factored? Because it is necessary, but it's not like a routine expense.
Would it be under entertainment maybe?
Maybe, but the thing with entertainment is it's unnecessary. It's a luxury.
Sure,
Clothing isn't a luxury, but it's also not like this. You're not buying new clothes every month or every couple of weeks, unless you're extremely wealthy. Like,
Is there like
that-
a lifestyle expenses, like just basic needs around like your residence, like clothes, let's say like things like soap, like cleaning supplies, toiletries.
We'll go with, like lifestyle maintenance. We'll put it under lifestyle maintenance category of like you need clothing, you need cleanliness, things that you will not die without, but you are not going anywhere without, right?
Yeah.
True.
So, your lifestyle maintenance. If you're buying like Givenchy and Fendi and Prada and Balenciaga, brother, you make $60,000 a year. That's
Minimum.
why are you buying this? Like, I get you live by yourself, you have disposable income, but we're reimbursing you if you bought like clothes from like Target or like Sears or like it's Sears, clothes from like Kohl's or something, right?
Like Kroger or Walmart.
Yeah. Hey, Walmart does have clothes.
Kroger has clothes.
What?
Yeah,
I didn't know
Kroger's
Kroger
Literally,
the
it's called like the
Oh my
dip.
gosh.
The dips. The shirt I'm wearing right now came from Kroger. I bought it.
Wow, I didn't even know that.
Yeah.
You learn something new. Kroger clothes. Huh.
Yeah, but these people it's a one like was it like 1 in 3 people considered moving, but like something we should probably also think about is how mortgage rates inch up, but experts still predict a decline through 2024.
Hey, segues. Okay.
Fantastic segue. I'm working on it. I think this comes from Yahoo
Every
Finance.
city
I
in
can't remember
2014.
where this came from because I wasn't able to print it, so I had to copy it to printing. But the story is by Rebecca Chan. And it goes, the average rate for a 30-year mortgage rose from 6.69, nice, from 6.60 a week prior. Mortgage costs have retreated more than 110 basis points over the last 3 months since the peak of 7.79% in October. That trend is boosting hopes for improved affordability as rates are poised to drop despite this week's minor climb. While rates are still hovering around mid 6%, significantly higher than the average in 2021 and 2022, consumers are becoming increasingly active in the housing market. More buyers are applying for mortgages, signifying a belief that home prices will retreat along with mortgage rates. Quote, "We do have home sales, and particularly existing home sales, brackets forecasted, to pick up around 4% this year," end quote. Mark Holcim, Vice President and Deputy Chief Economist at Fannie Mae, told Yahoo Finance. Home buyers see a glimmer of hope. Home buyers are trickling back into the housing market as the level of mortgage applications increased by 3.7% from a week prior, according to the Mortgage Bankers Association, MBA, in its weekly survey ending January 19th. The seasonally adjusted purchase index, meaning new home loans, jumped 8% over a week. However, the unadjusted purchase index remains 18% lower than the same week a year ago. Americans are feeling more optimistic about the housing market, according to the latest Home Purchase Sentiment Index, HPSI, surveyed in Fannie Mae in December. Quote, mortgage rate optimism increased dramatically this month, with a survey high share of consumers anticipating mortgage rates declines over the next year, Holcim said. Rates projected to drop below 6% by the end of the year. Economists at Fannie Mae predict that slowing economic growth in 2024 will bring rates down to around 5.8% by the end of the year. Quote, part of the bracket rate cut is the slow growth that we see across this year. Part of it is the Fed easing. Part of it is the Fed easing. Doug Duncan, Fannie Mae chief economist, told Yahoo Finance. But the first cut may come later than expected. Consumer prices increased 0.3% month over month and 3.4% annually in December. Quote, with economic activity and labor markets in good shape and inflation coming down gradually to 2%, I see no reason to move as quickly or cut as rapidly as the past. End quote, Christopher Waller, Federal Reserve Governor. Couple things I gotta say on this. Usually when for example, I quoted, more buyers are applying for mortgages signifying a belief that home prices will retreat along with mortgage rates. That alone might tell people who are selling the homes to hold their ground, since a lot of people are now applying to, purchase homes. So that's something to think about. Another thing is, earlier it said the trend is boosting hopes for improved affordability as rates are poised to drop below despite this week's minor climb. Usually if something is declining and then there's a slight increase, well, it may go down again, but that does mean we're starting to level off, as stated later in the article, with 2024 will bring rates down to around 5.8%. So that's probably where we're trying to settle by the end of the year. And my last comment on this article is Americans feel more optimistic about the housing market, according to the latest home purchase whatever. No offense to the average home buyer, but the average buyer of anything, in like housing or stocks, they're usually behind the market.
Yeah.
So that's why you're watching this podcast.
Yeah,
to get ahead of the market.
That's why you're watching the GiffenCast podcast. Subscribe to stay ahead of everybody else. So I see one of two things happening. Either A, the housing market is gonna drop to what they're predicting at 5.8%, or B, because everybody and their mother is A, moving to someplace cheaper, and B, they see that it's going down, so everyone's gonna jump on that bandwagon. Prices may go up again. That's my 2 cents.
I mean, this feels. Oh, Gavin, I interrupted you. You go.
No worries. I was just gonna ask if this would have any correlation to just simple supply and demand, like, more people. I mean, you can go back to the whole purchasing power thing. Not to start that again, but if prices of things are not as high as they once were, more people will buy, and if more people buy those products that have decreased prices, then they're just going to shoot back up. So do you think this is a similar situation like Connor just mentioned, where people are seeing these mortgage rates drop, and all at once everyone's like, holy moly, this is the first time mortgage rates have been this low in X amount of months, let's jump on the train, and an influx of people go into the housing market looking for homes, and then the rates just jump back up? Is that what we are foreseeing kind of potentially happening here?
I think so, yeah, mainly because I haven't done a lot of research on it, but it seems like we're not really, houses aren't being built at an extraordinary rate for people to be like, oh, there's a lot of supply about to be flooded into the market. One, because houses take a lot of time to build, and there's a lot of legal stuff to go behind that. So we're basically more or less still working with the same amount of houses on the market, but now a larger amount of people want to jump in on that. So, like you said, as you mentioned, Gavin, this is as far as we can tell, simple supply and demand. There's a lot of demand, but only a limited amount of supply.
So then, follow-up question here would be like, I don't know if you touched on this a little bit or not just now, but people that own houses that may have been looking to sell, are they going to be extra motivated to look to sell now compared to before?
I was actually thinking about that. Like, now people who are like, I may or may not want to sell my house, they might be more inclined to be like, you know what? A lot of people are willing to fork up more money to
Absolutely
to buy a house. Maybe I can get more than what my house is worth, and then but that brings us back to, well, there's a lot of demand, so I'll increase the price a bit because there's so many people trying to buy my
100%.
house.
Because, I mean, depending obviously on how much a specific house is worth, if the mortgage rate drops, from hypothetically 7.8%, which it was around October of last year, down to a predicted 5.8%, we're looking at a 2% interest drop. So, or mortgage rate drop, my apologies. People, I mean, could mark up the houses, and people wouldn't mind to pay a little bit extra because they know in the long run, 30-year fixed rate mortgages, they're going to end up spending, less as if they were to purchase a house for cheaper, but with a higher mortgage rate.
Or a variable mortgage rate.
Sure. Yes.
But
I'm not even sure you can do in the United
scary.
States.
Those things are scary.
I don't even think you can do variable rates after 2008. I think we basically pushed them out.
Yeah, that was the reason for the 2008 crash, was because
you can still do them in Canada, though.
Well, that's Canada. So I was thinking about the 2008 crash. I read it. Okay, I'm gonna quote the book. It's called the five crashes in the 5 United States crashes. Sorry, the United States history in 5 crashes. And the reason was mainly because this one bank in California offered adjustable rate mortgages because they didn't have any laws pertaining to it. And the problem was, so there was I think either 3 or 4 ways you could do it. You could do A, you can have a fixed rate. Sorry, 4 ways. A fixed rate where you paid above how much you were in other banks, so you'd pay it off sooner. A, where you paid just enough to, you're going to complete your 30-year whatever on time. C, you were going to pay under the amount. You're going to pay under the amount to for your mortgages, and well, you are going to be behind. Those are the three options that they presented with adjustable rate mortgages. And the idea was that the people who were going to pay more on their mortgages per month would help subsidize to those who were paying less. Unfortunately, what they didn't expect with the like a lot of the crashes and a lot of adjustable rate mortgage stuff was that a lot of people have now chosen to underpay the amount they would owe each month, which inevitably led to banks running out of money because, well, not enough money was coming in. And then, boom, housing crash of 2008. Well, that's not the only reason, but that was one that really stuck. So that's why those things are scary.
Yeah. So, actually, I'm going to do something a little crazy. I'm actually going to push back on both of you here and say that I think housing right now is not a supply issue. Houses have actually been getting built. My understanding is at a pretty high rate, especially during COVID. Gavin, are you good?
Yep, I'm good.
Okay, I just heard blipping in the background. I want to make sure your mic wasn't messing up.
My bad.
So there's more houses in the United States than there are people looking to buy houses. The issue is these houses are in the middle of nowhere: Indiana, Ohio, Nebraska, Iowa, Illinois, Minnesota, like places where people don't want to live. I'm not saying this is the only issue, but like a big part of this. And we saw this happen a couple of years ago, especially back like 2008, post 2008, where people were moving around. You saw cities like Austin and like Austin was a big one. Miami was a big one. A bunch of these cities that were like, Miami had a reputation as an old person city, right? It wasn't party city. I mean, it was Miami. It was still like, Miami Heat and all that. But like 80s Miami is way smaller than 2020 Miami. You saw same with Austin and Dallas and a bunch of these cities in Texas. Same with like Colorado, Boulder, Colorado, or Denver, Colorado was a big one. People moving to these away from centers like New York, LA. I mean, the LA to Austin pipeline is like a much maligned thing in Texas. Because what people will do is housing will get too expensive in one area. They'll find an area that's like kind of like it in a state where it's not as expensive, somewhere really far away. And then they'll move there. And we're seeing this happen right now with cities like Charlotte, North Carolina. Cities like Nashville, Tennessee is becoming a really popular destination for people to like move to because Tennessee is cheaper. It's a relatively poorer state. The taxes aren't as high. Nashville's not a terrible city. I mean, it's the home of country. So if you're not allergic to that stuff, you'll be okay. And so you basically get these people with like slightly stronger, maybe not necessarily stronger, but people who are looking for more affordable housing than in their home state of like Florida and Texas at this point are getting expensive. New York has always been expensive. I think Minneapolis was another city, and like St. Paul are also becoming like common places for people to move. So you're seeing these cities that are like, they're not unknown, nobody. Des Moines, Iowa. Who cares, right? It's not like these tiny cities. Lexington, Kentucky, I think is one of the cities that people are moving to. Cincinnati is a big one that people are moving to because it's cities that like they're not the bottom of the barrel, but they're certainly not Chicago. They're not LA. They're not New York. They're not Boston. They're not like Philadelphia. They're not DC. They're not like the kind of like cornerstone cities in the United States, but they're also not. Wait, this is a place? Why would you name it that? Like, they're not like these middle of nowhere. I mean, they kind of are middle of nowhere, but like they're big enough city centers that you feel like you're in a city, but they're small enough to be cheap, right? They're not they're not Chicago. They're not LA. There isn't the Beverly Hills. There isn't the Upper East Side. There isn't Navy Pier. I don't know if people live on Navy Pier. I don't know as much about real expensive places in Chicago, but like. This isn't as much a supply problem as it is a location problem. I will do a little bit of blaming of the buyers here in that every buyer throughout history has wanted to eat their cake and have it too. It's a Jeffrey Dahmer thing. He was super crazy on like saying this is how they found him. This is one of the ways they used his brother to catch him is he was like super like crazy about saying have your cake and eat it too because that's the technically correct way of saying it. He got super frustrated at people saying eat your cake have your cake and eat it too. It's eat your cake and have it too. So quick Jeffrey Dahmer reference. Not Jeffrey Dahmer. Ted Kaczynski. Boston Bomb. Sorry, wrong terrible person. Wrong evil white guy. My bad. Wrong evil white guy in aviators. My fault. So anyway, I got these new aviators.
Okay.
But like I will blame them a little bit. Everyone, this is why we saw the explosion of suburbia from like the 60s onward. Because everyone wanted to have the nice, quiet quaintness of the little town from the Andy Griffith show that I can't for the life of me remember the name. Mayberry, whatever.
Yeah, it might be Mayberry.
Like everyone wants that like small town vibe. You get a nice house, you're not too far from your neighbors. Boy, it's a community. But no one wants to be a 4-hour drive from the city. That's awful. So what did they do? You park just outside the city. In the suburban area. It's not urban, it's not rural, it's suburban. And then you see as more and more people start to come in, this place becomes more desirable. This is where a great example of this is actually my grandparents' home that they used to own in Orange County, California. When they moved there, it had just been changed from an orange grove. Like it was former farmland. It was like a good bit outside of LA. And then as LA began to grow and expand, they went from being pretty far out into the suburbs, almost rural, to suburban, to pretty like almost metro area, to Orange County is now just a part of LA. It's in LA And this is where you get this like creep of American cities splaying out super wide because people don't want to. Who wants to live in the middle of LA? No one. It sucks there. Same thing with New York. Same thing with Chicago. A ton of you don't want to live in these like enormous high rises where you get this tiny little apartment and you're paying $32,000 a month for one tiny apartment way up at the top of the. Actually, you don't even get at the top of the building because that's actually the expensive one because that has the good view now. So you're like, yeah. So you're like maybe one floor up. People can like jump through your window. Your windows are barred, and you're paying like $32,000 a year to live in this little apartment
with no bathroom.
With no bathroom, it's like a shared community shower, and the rats are the nicest people there. Okay, like it is not a great spot. And why would you pay that much when you could trips your way, maybe like a 15-minute drive out of the city, and pay the same for a small little townhouse that's super cute and oh my gosh, it's so nice and like the neighbors are so friendly. So you do that, and then like this neighborhood is getting so full until they start building like tiny, high density housing nearby. And it's like, whoa, hold on. And then now you're getting apartments and like now you've been subsumed by the city. All the home buyers want to have their cake and they want to eat it too. They want to eat their cake and they want to have it too. They want to do both. Where you want all the cool, fun stuff, the attractions, the socialization, all of the fun stuff and the cool stuff that comes with cities. Cities do genuinely have really, really good parts to them. But you don't want all the other crap that comes with that. And you want the quaint, quiet, sleepy little, no noise, great for your kids environment that like some rural places will bring. But oh my gosh, I don't want to be 45 minutes from a Walmart. What if it snows? I'm screwed. So people always shoot for this middle ground of not in the city, not out of the city. And this is how you get cities that grow. There was a big rush to LA decades ago. And that's how you watch the city of LA slowly eat Orange County. Basically, the point I'm trying to get at is I'm blaming the buyers a little bit. This is not a supply problem. This is buyers not wanting to live where there are houses. People don't want to live in Nebraska, just flat out. Or they don't want to live in like South Dakota or Minnesota because it's swampy, or like a whole bunch of other states where there is housing. It's available. You can live there. It's not expensive, but now you have to drive 30, 40, 50 minutes to get to the nearest big city like Cleveland, Ohio, or Cincinnati, Ohio, or a lot of cities in Ohio.
Columbus, Ohio.
Columbus. There we go. I knew there was one more.
They're all C's.
Yeah. Like you don't want to live in like the middle of nowhere, Ohio. You want to live like just outside of Columbus. Why would I want to live in the middle? Columbus isn't that bad. I'll live outside of Columbus. Yeah. I will say this much as it kind of sucks, and I recognize there are issues with housing and all that other stuff. If you're really that struggling with finances, go live in a cheap state like North Dakota, where housing is cheap, and you won't have that issue. Sure, you won't be living in the heart of Las Vegas. It won't be, bar hopping every night and theaters and museums and nightclubs and all this other stuff. But, you'll be able to eat. Which is why people pick cities like Nashville or at one point Miami. Whereas small city, small enough to where you can still snipe the suburbs, big enough to where there's still stuff to do. Yeah, so I'm actually going to push back and be not a supply problem. In a lot of cases, this is like a young person, Angie, they don't get to live in the Upper East Side of New York problem. Oh yeah, not entirely, yeah. But I think that's a large contributing factor, in my opinion.
Yeah, it's a buyer problem thing. Is it also to kind of piggyback off your don't be you won't be hopping at bars every night. It's a lot of things that might really help people with finances and maybe the economy or whatever is living below your means. I understand that social media has perpetuated this whole look how much money I got, look at all the stuff I do. But it should most people should probably be living below their means. Absolutely none of this is financial advice. Talk to your financial advisor. But also speaking about places of people, speaking of people that don't want to live in one place and want to live in a better place, as China's markets stumble, Japan rises towards record. This comes to us.
Another great segue.
Thanks, I'm working on it. This comes from the New York Times. It was written by Joe Renenson and Alexandria Stevenson. Japan's stock market, overlooked by investors for decades, is making a furious comeback. The benchmark Nikkei 225 index is edging closer to the record it set on December 29th, 1989, which effectively marked the peak of Japan's economy ascendancy before a collapse that led to a decade of low growth. China, long and impossible to ignore market, has been spiraling downwards. Stocks in China recently touched lows not seen since a rout in 2015, and Hong Kong's Hang Seng Index was the worst performing major market in the world last year. This year was set to be a tumultuous one for global markets, with unpredictable swings as economic fortunes diverge and voters in more than 50 countries go to the polls. That's actually something I want to point out. Apparently, like, more than 50 countries are having elections this year.
Wow.
Yeah, so that's going to be that could possibly be a huge, like, chaotic flip.
Economic shake-up, yeah.
So, thought I'd point that out. Seizing on this shift, Japan's Prime Minister Fumio Kishida addressed more than 3,000 global financiers gathered in Hong Kong this week for a conference sponsored by Goldman Sachs. Oh, gee, thanks.
Was that the guy that almost got Abe Lincoln?
Maybe. You have to look that up while I'm reading the rest of this. You gotta let me know. Because now I'm intrigued. Now Japan has a golden opportunity to completely overcome low economic growth and a deflationary environment that have persisted for a quarter of a century. Foreign investors pumped $2.6 billion into the Japanese stock market last week, adding to $6.5 billion the week before, according to data.
It's a different guy. It was Shinzo Abe that got killed.
Oh, okay.
I feel bad now.
All good. According to data from Japan Exchange Group, all that money has sent Tokyo's Nikkei 225 surging about 8% this month. This week, Toyota rose to a record market value for a Japanese company, about $330 billion.
30 million
millions dollars. Surpassing.
Yeah, I'm investing in that now. Come on now.
The market set in 1987 by the telecom conglomerate NTT. A combination of factors has contributed to Japan's recent success. A weak yen had made stocks look cheap to foreign investors and has been a boon to exporters and multinationals based in Japan that make their profits overseas. Unlike inflation in other parts of the world, rising inflation in Japan has been a sign that things are heading in the right direction, after decades of falling prices and sluggish economic growth dampened appetite among consumers and companies to spend. And there is one additional factor: geopolitics. The longer-term prospects for Japan, the third largest economy, are looking good when parts of the world are soaring on the second largest economy, China. In a recent survey of global fund managers by Bank of America, selling Chinese stocks and buying Japanese stocks were two of the three most popular trade ideas. China's ruling Communist Party, they are communists, has sought to insert itself into the business sector in recent years, leaving investors worried that politics often trumps the bottom line for many of China's corporate titans. I mentioned that because I do talk to a coworker at work because he didn't think China was communist. So I'm clearing that up now.
I mean, we're at that point. You're arguing like stated position versus like practical application.
Yeah.
China isn't nearly as communist as they once were. They've embraced a whole bunch of like free market stuff as their economy crashed towards the end of like the 1980s.
1980s, yeah.
So, communist in name, maybe not in practice.
And economic practice. I feel like if you have a growing company and the Chinese government's like, yeah, you have to have someone in that company that works with our party so we can align our values.
Well,
We've got
theoretically, China shouldn't have companies. If they're like, depending on your definition of communism, that's a lot closer to what people would consider like traditional socialism, or dare I say the F word, fascism, where like
I dare you to say it.
It's mostly based around like control of an existing economy that has the ability to operate in somewhat free capacity, while still under regulation, versus like a real communist thing, which would be more of like which even China never fully achieved this, which would be like there are no companies and everything is just kind of like an institution of the state, which it was very much like that at one point, and then it waned off of that heavily as they realized that made them ineffective at competing worldwide, and they were just unable to sell their products. So they denationalized some of their industries.
Yeah, so communism was so bad that they had to start adapting capitalist ideas. Fantastic. That's just me. China has not struggled for economic growth like Japan, but a protracted property market collapse has shredded consumer and investor confidence. On Wednesday, the central bank, the People's Bank of China, freed commercial banks to do more lending, essentially pumping $139 billion into the market by lowering the amount of money banks are required to keep and reserve. But many investors say...
That's an American idea. We patented that. You can't take it.
You can't steal it.
Come on.
But many investors
Our
say...
idea. Comrade.
You're looking less communist. But many investors say that measures have failed to address a much bigger problem, China's economic trajectory. They remain disappointed with China's response to its broader economic slump and its perceived reluctance to pull off show-stopping stimulus, as it did in previous periods of economic stress. The Hang Seng Index fell 1.6% on Friday, reversing some of the week's gains. Economics, financiers, and corporate executives around the world looked to China last year for an economic rebound after its government scrapped the zero-COVID policy, pushing lockdowns that at times put the country into an economic freeze. But Chinese consumers didn't participate in the kind of revenge spending, in quotes, seen elsewhere after reopening, and a property crisis has weighed on families, many of whom have nearly 3/4 of their savings tied up in real estate. There is not much confidence speaking of real estate, I don't know if it's true, but I did hear that in order to buy a house in China, you have to pay for it 10 years before you can live in it. That's how far behind they are in their housing stuff.
Yeah, China's housing market is horrific.
So you're telling me a new homeowner has got to throw that 20% hypothetical down payment on that baby when they're 12? Come on now.
Bro, I don't even think
doing?
it's just 20 down. I if I read it correctly, they have to pay for it, like pay it off. And then 10 years from then, they can live in it. I could be wrong.
So these 12-year-olds are throwing down, X amount of cash, saying, yeah, that one's mine.
One day.
Yeah.
I'll watch it grow like a chicken.
The Chinese housing market has been in a really, really, really bad position for a very long time. It's basically been held up by it's basically a house of cards, where it exists so long as the Chinese government says it exists, and a lot of it, and to be a little bit pro-Western here, is because they basically economically trapped a lot of their businesses with the yuan.
Yeah, and I also heard that a lot of this crash, I think it said it in here, that I guess one of the biggest mortgage lenders, whatever they have over there, actually just got
it
liquidated.
Went under.
Is that the right? Yeah. So
yeah,
no
pretty scary stuff.
Mm-hmm. There's not much.
This is why I don't really care that much about people saying China's buying land in the U.S. I'm like, okay,
How are these preteens supposed to get their mortgage loans, guys? Come on, China, what are we doing?
Come on,
So,
step it up.
to provide a little bit of background on why China's economy is doing really, really poorly, it's actually because the Chinese people are getting really skilled at things. The quality of Chinese products has risen quite a bit in recent years, which means that they effectively demand a higher payment that they're not able to receive. And so you run into this issue of like the demand is for really, really cheap, super fast, easy products. But Chinese manufacturing, both on the the material engineering, the mechanical engineering, and the labor side have all gotten so skilled and good comparatively to what it used to be that it is too expensive to use Chinese labor. The problem is a lot of China's engagement with the rest of the world's economy is with their labor advantage. They have the cheap labor. You go to China, you get cheap labor, and China maintains strong control over their economy. But now that they can no longer can no longer actually leverage that advantage over nations like Malaysia or like Pakistan or whatever, right?
Yeah.
Don't quote me on Pakistan. Or like Vietnam is a good one you see a lot more. These other surrounding nations that are able to they have less skilled laborers. Companies are like, man, those Chinese guys are demanding like $2 an hour. What happened to the days when you could get a family of 30 to work for 32 cents and some bubble gum? What happened, right? So they're going to like Vietnam and they're like, we'll do it without the bubble gum, right? Or we'll do it just for the bubble gum. And like now China's in a really hard position. Now, granted, they still have an enormous labor force. But do you know has a bigger labor force? Their southern neighbors, India, who is becoming one of the largest rising economic powers in the world, which is making China super insecure because India is literally eating jobs from China. Jobs that would have normally gone to Chinese labor is going to Indian labor because India is doing what China did like 30 years ago, which is eat the cheap labor market. And so now that China's labor is too skilled, they either need to open up their economy to be able to work with higher quality stuff, work with more foreign investors, more foreign imports, but that requires opening up their economy. And most of China's wealth is built around the fact their economy cannot go anywhere. They use the yuan. So you remember a couple months ago when the BRICS countries, for reference, BRICS is Brazil, India, China, and Russia.
Yeah.
BRICS. Brazil, Russia, India, China. It's BRIC. And they're just called the BRICS nations. BRIC''S. And they're like, oh, we're going to use the yuan to fight the dollar, right? We're going to depose the dollar as the global currency. Basically, everyone but China was on board with that. Because even though the yuan is the strongest out of all of those currencies, the ruble, I don't know what they use in India. How do I not know that? Or the Brazilian dollar, peso. Okay, I'm less educated on this than I thought. Anyway, the yuan is the strongest currency by far. It's used in the most amount of trade just because China's the biggest economy in that group, by a long shot.
Time out.
Maybe not a long shot. India's pretty big. Yep.
India rupee.
India rupee. All right. What about Brazil? Brazilian dollar or peso?
It is the Brazilian real.
All right, Brazilian reals. Of all of those currencies, the yuan is the strongest. It is the most stable, as seen with the price of Russia's rupee compared to the U.S. dollar during the war with Ukraine. But China uses the fact that the Chinese government is the only people who can deal in foreign currencies. Businesses that exist within China can only deal in the yuan. So all of that, when you pay $30 to AliExpress or whatever, a lot of that it goes to the government, translated into yuan, and given to the business. Roughly, that's a rough approximation of how it happens. But this is how they basically trap their economy into this position where because a lot of their companies want to leave. it sucks being in China if you're a company, because you have very little control. You have to have that like party member on your board. There's a ton of stuff that really kind of sucks. So they want to move to the United States, to Malaysia, to wherever else, right? Whatever the place might be, they want to not be in China. But they're trapped because they do not have access to a different currency. The government basically fully restricts it. So they can't trade in like foreign currencies, which is why they don't want the yuan becoming a nationalized currency, because when it gets nationalized, then they can no longer exert governmental control over it, or total governmental control. It can then be directly exchanged for dollars, and all of their economy instantly evaporates. So, and this is the underlying thing with China's economy being really poor. We're seeing this big dip, is that a lot of their economy is based off of their housing market, which is why you see all that wonky stuff. China's real estate market specifically, which is why you see one of their biggest real estate companies getting liquidated, which is why you need that 10 years down on a house. Because a lot of this is kind of just like a house of cards being held together with like the government holding it up with their hands. Like this can't even stand on its own. They're holding it there and praying a strong gust of Japan doesn't blow in and like knock over their economy. Like it's not a great position to be in, but it's one that they put themselves in an effort to trap the global cheap labor market. Hey, you want to come build a factory in China? It's super cheap building costs, super cheap this, super cheap. Everything is super, super cheap. Come to us, come to us, come to us, come to us. But now they can't afford for things to get more expensive, and it's inevitably getting more expensive. So they're trying to like stifle it as much as they can. And then you have nations like India popping up around them, basically beating them out of the market. So yeah, from my understanding, a lot of like economists have been saying China's like economic collapse has kind of been staved off almost entirely for like the past 10 years by the force of governmental like saying no alone. Like the government just basically saying, no, we refuse to let the economy crash. Remember when you were reading the article and it said they expected them to pull off like a miracle
the revenge buying
subsidy? Or... It's like, oh, we expect them to like pull off like another magical subsidy. Most of these magical subsidies is the government coming in and basically going, all right, we're fixing the economy by basically just pumping it full of money. But yeah, China's been in a really unfortunate position for them for a very, very long time, because as the Communist Party, who wants total control, I say as the Communist Party, actually that's not unfair. As the Communist Party of China, you want as much control over your citizens as humanly possible, right? Assuming that your political motives are that you want them to believe that your nation is the most powerful nation, and your goal, I'm not going to say China's goal is world domination, but they definitely want a whole bunch of power on the world stage. And who doesn't, right? The United States obviously wants a whole bunch of power on the world stage. Every giant nation has their moral reasons to why I should be in charge. And the way they chose to go about it is basically, in large part, large swaths of like subjugative practices, which have been coming back around to bite them in their current economic state. Like they're down. All of their current neighbors are causing these issues, and if they open up their economy, like I said earlier, it evaporates. The wind blows in, their house of cards gets knocked over, whether they like it or not, and they basically fall off the world stage. They cannot grow as a nation. Their opportunity to grow as a nation and an economy, and by that, I mean nation and an economy, to grow in global influence using their economy, like the United States did, that window passed. They needed to like more naturally progress with their markets as opposed to trying to hold them back artificially, which now means that they can't, like you're stuck. Think of it like you're in a large body of water, right? And there's think of it like you're in a pool, and this pool is like infinitely deep. And you are like tied to the floor, and the water level is rising, right? So what you do is you swim down to kind of like get the worst over with. Say in this case, the reason you need to be down there is you have to like scrub the bottom of the floor, right? In an effort to outdo all your coworkers, you swim to the bottom of this pool where the water is slowly rising and start scrubbing the floor down there where people rarely get. No one wants to scrub that floor because you have to swim down to get it. And so what you do is you chain yourself down there. So you don't have to like go back up for air. This is your artificial restriction, right?
Mm-hmm.
And then you hit a point where there's a couple of other people who'll swim down occasionally and start scrubbing for a little bit, but you've chained you don't go back up for air. You got your little scuba kit. The problem is your scuba kit's running out of air, and the water level has hit a point to where you will get. Are you aware of what like the bends is? The nitrogen bubbles in your blood that kill you.
Mm-hmm.
The water levels hit a point to where if you try to swim back up, you're getting the bends. You've basically your once advantage that netted you, say like you get paid based off of the amount of gunk you scrub off the pool, right? As the water level continues to rise. In an effort to make sure you get paid better than everyone around you by scrubbing the heaviest gunk and trying to make sure that you have the best access to it by chaining yourself to the floor, artificially like reducing your ability to like follow the gunk up as the water level rises, you've basically killed yourself. You're running out of air, which is basically your economy slowly sinking. And when you go up, you get the bends and die, right? If you try to release yourself, you get the bends and die, and then India swoops in and starts scraping all that gunk for you. So yeah, all of this is based off of China horrifically mishandling their economy, and I would not be surprised. I'll say this: political and economic projection. I would put maybe $3 on this.
A specific amount of dollars.
This is something I think we should do like broadly as a podcast, kind of a little meta. If we're gonna make like statements, have like at least some idea of like how much money we'd be willing to bet on it to like kind of like enforce accuracy, right?
Okay, so I would invest $3 into this statement.
Okay, so I would bet $3 that in the next 10 years, I'll say the next 5 years, China basically collapses as a nation, as an economy. I'll say they collapse as an economy. Because we've had nations collapse kind of as economies before, but rarely do they get restructured anymore, especially post-World War II, as a new nation. Other nations kind of swoop in and save them, and then they basically restructure their entire nation, but they're still technically like China, if that makes any sense. So I think China will basically suffer a full economic collapse and basically get restructured by either the United States or other people within the next, I'll say, 5 years. I'll put $3 on that. So if it doesn't happen, I owe $3 to someone. Gavin. I owe $3 to Gavin now.
Okay. I don't know. I feel like
yes.
Russia.
Let's go China. Come on.
I feel like Russia would probably absorb China more than. I don't know.
I don't think they have the economy.
I don't think they have the economy, but also shipping like our ambassadors over to China.
Broader political take. If anyone's eating China, there's 2 nations that are going to do it. There's 3 nations on the board for eating China: the United States, Japan, and India. That's it. Those are the only nations that are ever going to be able to actually fill in what China lost. And I think economics-wise, only the United States could do it, and people-wise, only India could do it. And the only reason I'm putting Japan there is because it's like the largest economy in the area outside of China. But yeah, I think it's 100% going to be the United States or India. I would put like quite a bit of money on that. I will caveat this. I do not count it as a loss. It is a tie if the nation shatters into a bunch of micronations. Okay?
I don't know. I feel like with the relationship China and Russia have right now, that like...
That's assuming Russia's around in the next 5 years.
I know.
Russia's in a worse economic spot than China.
I'm making assumptions here. You're placing a $3 bet.
All right. How much you betting that it's Russia?
It's Russia. Let's even it out. Let's go $3.
3 on 3. Okay.
3 on 3.
Gavin, you get $3 if China collapses, and you get another $3 if Russia subsumes them.
Valid. I will take that all day long. I'll put my life savings. Against it.
Caveats on conditions for victory and for loss. I I want to do a little bit more as to like what my actual conditions for like what a full economic collapse looks like. But I will say if another nation needs to come in and effectively bail out the nation of China, I will count that as when I say bail out, I mean like trillions and trillions of dollars. And they basically have a large hand in restructuring their like political system. If the CCP goes out and their economy, I will count that as China basically going down. I will not count it. I will not count Connor as a loss. I will only count Connors as a loss if India or the United States or some other nation comes in and eats China, other than Russia. I will not count it as a loss if China goes through and like basically devolves into like tiny nations. Because then we're gonna have to wait like 30 years for all those nations to get eaten up by their neighbors, and then like maybe 30 survive.
And then by then we'll probably have enough money or enough time under our belt to where we finally get our house in China.
Yeah, pretty much.
Yeah. It'll be about 10 years from then.
China. All right.
But I think the best way, same article, but kind of swinging off here, like, I think the best way, at least for now, because as it states here, it's a golden opportunity for Japan right now, because the China's market is kind of stumbling. I think Japan needs to really capitalize on exporting something. Like I know they have Toyota. I know they have anime. God knows I know they have anime, and like a handful of like video game companies. But I think they should probably try to focus on something that could more or less either meet or exceed what China needs. For example, the U.S. aims to announce big grants for chip plants by the end of March.
I love the CHIP Act. It is one of the best pieces of legislation to come through Congress in the past, like, I want to say 20 years. The CHIP Act is amazing. Okay? I will die on that hill.
I'll be there with you. But, so, this comes to us from, I think it comes from us from Bloomberg. That's my one free article. This is by Ian King and Mackenzie Hawkins. The U.S. is aiming to announce major chip grants by the end of March. People familiar with the plan said, paving the way to send billions of dollars to semiconductor makers in a bid to supercharge domestic products. Completely side note, I hate when people are like, people familiar with whatever. I understand that anonymity has to be a thing, but I'm somewhat familiar with what's going on. Do I count? Can I make a statement? Side note, sorry, small rant. The awards, slated to go to Intel Corp and other chip makers, are a central piece of the 2022 Chips and Science Act, which set aside $39 billion in direct grants to revitalize U.S. manufacturing. Intel has said that the grants will determine how quickly it progresses with expansion projects, including a planned facility in Ohio, Cincinnati, that would be the world's largest. Overseas chip makers such as Taiwan Semiconductor Manufacturing Co. and Samsung Electronics Co. also are expected to get a portion of the funds, helping them pay for factories in the U.S. On that note, does that mean like Taiwan is gonna like start kind of like how like China is buying U.S. Farmland? Is Taiwan gonna have some factories over here?
Yeah, but like Japan has factories, not Japan proper, but like
Toyota.
Lots of yeah, there's Toyota, which Japan is a much more free market. I don't actually know what level of government intervention exists in Taiwan regarding the Taiwanese chip company, considering that it's like the Taiwanese chip company. But then again, we have a lot of companies in the United States that are like the American blah 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 company, right? American Eagle.
American Eagle, yeah, I was thinking that, yeah.
There's a bunch of brands that have America in the name, but like they're not nationally. It's not like the FDA farm, right?
Oh, okay. I got you.
So I don't know if the Taiwanese chip company is like a company, a state. So, for example, we do have stuff kind of like that, like with like Fannie Mae. Fannie Mae and Freddie Mac were like semi-government organizations. Maybe I'm talking on my ass. I don't actually remember if they were. Are they?
I
feel like they were semi-government. Yeah, I'm pretty sure they were semi. I'm just gonna run with it. They were semi-government organizations. So I don't know if Taiwanese chip company is like that, where it's like a semi-government organization, or the power company in the United States. That's heavily government regulated, or the water company, unless you live in Texas. like power, water, that type of stuff in the United States. Internet, AT&T, Graham Bell's company, it's all the same thing, believe it or not.
Good to know.
Yeah, it's actually the same contiguous company from the creation from Graham Bell to modern day AT&T. Pretty crazy. These companies are like semi-nationalized industries, or in effect, basically nationalized industries. So if it is the case that Taiwan's chip company is like that, then yeah, they would be buying land. Otherwise, it's just a business.
Okay, I gotcha.
But just as a broader thing, I'm so proud of America for passing the Chip Act. Oh my gosh, it's so great. We're bringing back factory jobs. We're doing a whole, and this is super important for like security, both military and private. We now have like control, not that I'm saying I inherently distrust Taiwan, but we have a lot tighter control. I don't even know how much safer it's going to be on the civilian side, but from the militaristic side, having direct influence and monitoring capacity over the production of silicon chips is a huge leg up. Because wasn't there like that whole huge thing like a couple of years back where like we found out that like a lot of the Chinese chip manufacturing companies we were using was basically like putting spyware into the chips or something.
Oh, I think so. Or I think it might have been something involving software, like applications.
I could be 100% wrong on this. I have no idea how accurate this is. This is just like stuff I've heard. Okay, I'm spreading misinformation. I love it. All right.
I don't know. I feel like you were accurate with like, because I remember like they were talking about like TikTok might have had some spyware, mainly because from what's it called, Tencent.
Singapore.
Is that the company?
Yeah, Tencent is a Singaporean company, and all Singaporean companies are basically run by the Chinese government because Singapore is like a pseudo state.
Yeah, and I think they're required by the Communist Party that they have to track all the data that goes through whatever they do. So if American manufacturers are using it, it has to their data. I remember it was a big issue a couple years ago.
But
I'll continue.
Yeah, I'm just happy that we were getting. This is like the biggest bipartisan victory. I'm not going to stop talking about this. This is the biggest bipartisan victory in the United States probably since like 9/11. Okay, this is like unironically that big. We're bringing into the United States one of the largest and most vital industries in the world. We're putting it in. We're giving jobs to American people. We're giving the American economy an enormous boost by giving. I'm doing Trump hands right now, incidentally. It's the biggest boost the American economy's ever seen.
Oh, okay.
We're gonna have the largest growth. The little finger, like lowercase symbol.
Memes,
I was doing that.
I gotcha. Because I was thinking, I remember like, sorry, I'm not trying to bring politics.
No, you're good.
Into this, I remember like, I find it weird how like this happened under like the Biden administration, but because during the Trump administration, at least during the very beginning, he was all talking about bringing American jobs here. And I remember because like it was somewhere in like the mid north, like is either like Montana or one of the Dakotas, one factory, actually might have been Michigan. There was a factory that was about to go under, and they're all praying for Trump to help them out. And I believe Trump said that he would save their factory jobs. Only for like a year later, all their jobs to be shipped to Mexico, and then everybody got laid off. Now, granted, I'm not gonna give 100% to the Biden administration because I believe. Sorry.
No. I'm just gonna. Maybe this was Trump's like super genius long-term plan where he outsources a bunch of jobs to Mexico and then annexes Mexico. All right, continue.
You know what? That 4D chess.
4D chess. Cause disruptions at the border. Solve them by eliminating the border entirely. There's no immigration problem if they never have to immigrate.
Exactly. But now granted, I'm not gonna give 100% to the Biden administration because I do believe the sudden need for what's called manufacturing chips is because of, at least with China, prospective war. China really wants to take back Taiwan. So, but this is bringing American jobs. 10 out of 10.
Yeah.
Let's add something.
Yeah, go.
This is like something completely off topic. My laptop is sitting at a hearty 6% right now.
Oh,
All right, nice.
Okay. So we'll wrap this up really quick. It brings promises
you're
of
good.
thousands
You're
of well-paying factory jobs and new manufacturing hubs across the country. The timing suggests the awards may be unveiling before President Joe Biden's State of the Union address on March 7th. Commerce Secretary Gina Raimondo said her agency plans to make about a dozen awards this year, including several multi-billion-dollar grants to support advancing chip-making facilities. The awards, which could come as a combination of grants, loans, and loan guarantees, will cover up to 50% of project costs. For chip makers, the disbursement will help cushion the financial impact of building facilities that can cost as much as $30 billion and yet be obsolete within a decade. Intel is building or planning factories in Arizona and Ohio, as well as a new site in Germany, where the CEO is counting on European support. TSMC, TSMC, the Taiwanese semiconductor manufacturer, the world's largest manufacturer of chips, plans to spend $40 billion in building two fabrication facilities in Arizona. The Wall Street Journal reported earlier Sunday that the grants will help build new factories. Sunday that the grants will. I can't read, guys. The Wall Street Journal reported earlier Sunday that the grants to help build new factories may arrive in coming weeks. So American jobs, woot woot. That's great. We love that. So your laptop's on 6%. Moving on to the next article. Financial Times reports. This is coming from. Evan Livingston, Switzerland.
This is a lightning round.
Lightning round. Switzerland. Holcim plans to spin off U.S. cement business. Let's get some of the real stuff. The Swiss cement giant plans to spin off in North America businesses and lists it in the U.S. Quote, "We are too successful in North America. We are too big to manage this subsidiary," Jen Rich told the Financial Times. European companies have looked to the U.S. listing for higher valuations and greater marketing liquidity, and analysts covering that they can bring.
You said Hogan at the beginning. I have to do it.
Oh, sorry. The North American business is estimated to have generated about $11 billion of net sales in 2023. The company has a pipeline of acquisition projects in the U.S., Jenish told the Financial Times. Makers of building materials such as Holcim have fallen out of favor with more climate-conscious investors in recent years because of the carbon footprint of production such as cement and concrete. Holcim will remain listed in Switzerland after the spinoff, with a presence across Europe, Asia, the Middle East, Africa, and Latin America. I think this is a big reason for a lot of success in the cement business is because of 3D printed houses, and I kind of want to check them out.
They're pretty cool.
How much are these 3D houses selling for?
I don't know. I'd have to check really fast. 3D printed.
My walls came out of an extruder.
Printed homes cost between $10,000 and $400,000.
What?
However, building a three. Now this is coming from what's the company? 3Drific, whatever. However, building a 3D printed home can be 20 to 40% cheaper than building a conventional home. For example, a one-bedroom 3D printed home can cost as low as $15,000, or even $10,150.
What?
Why are you doing this to me?
I'm just excited. I'm so surprised at how efficient it is.
Oh, very efficient. I don't know much about these 3D printed houses. I see them on TikTok every now and then. I kind of want to see where they go. Maybe they'll add to the supply. All right.
Yeah.
Y'all agree? Yay, nay?
Yay, I agree. Add to the supply, so more
Consume.
All right. Well, thank you for joining us this week on the GiffenCast. We will see you next Monday. Any closing, guys? Any closers?
Nope, that's it.
All right. Time for the business kiss. Mwah!
Yeah.